Hi everyone, so I just wanted to record a video to explain how to draw support and resistance lines. So what are they first of all? Support and resistance lines are where they're lines on the chart that you can add yourself, like this one for example. It's an area on in terms of the price movement where the price either sees resistance or some support. So, you know, every time it hits a resistance area, it hits that level and comes back down. So if I zoom out on this chart, I'm on the silver daily time frame. You can see for a long time going back, you know, as far as 21, you know, we're talking about 3 years ago, every single time almost that it hits this level here, it hits it and comes back down, hits it and comes back down. It's just continuous pattern that's forming. So the more times it hits that level, the stronger the stronger the signal is. So in order to draw the support and resistance lines, you'd want it to be hitting that level at least 3 times, possibly a lot more. You can draw the support and resistance levels on the chart I'm using TradingView as my chart software. You just go to the little line up here. It's got lots of different things you can use. So horizontal line, you can just put one on there. You can change it to a different color. What I tend to do is I put red on my higher time frame charts, and if I'm on a lower time frame, I'll use a lighter color so that I can see that it was a smaller time frame support area when I'm looking from above on the daily time frame. Just take that off. So another thing I want to say about this is you don't want to clutter up your charts too much. So only draw the lines where there is really a strong support or resistance level and you can really see it. If you're squinting and you really can't see whether there's a level or not, then it means there isn't a level. You need to be able to look at the chart and say, right, there's one, there's one, there's one, immediately. So if we just go to a chart that doesn't have any on there, let me see. It's going to be one that I don't really trade very much. This one's not a good example to show you. Let's get another example. This is not a good example. No. I'm trying to look at one that's got clear levels to show you. Let's see these ones. Don't tend to trade these down here. Right, this one here, I'm on Glencore. So immediately when I looked at this, there's one. There's a level right there. Anyone can see that there's a level. It needs to be that instant. You need to look at it and say, right, there's one. Is there any other levels on here? Here's one. It's an instant thing. If you're squinting and you can't see whether there's one there or not, there isn't one. Another thing to be mindful of is you're interested in the most recent, which levels the price is respecting most recently. So this is a good example on this one. So you can see that most recently the price has been trending in between these two levels. But if you go back further, historically it was just smashing through these levels, and historically it did observe this support area here, but in terms of the upside it was just breaking through this level and there was no resistance there at all. So what's important is what's happening most recently. So you can see here back as far as March 23, which is a whole year's worth of time, you know, it's been trending and within this channel. So what's the point of these lines? The point is that when you're looking for a trading opportunity, if you're going to enter a buy position, you don't want to be getting in here. You don't want to trade into obstacles. So these are obstacles that can get in the way of your trading. That's the way I look at them. So the perfect place to get into a trade, if ignoring all other factors, because this market is actually downtrending, and I wouldn't get into a buy position on this especially, but if you've got a support level, the bottom level where the price keeps touching it and then going up again, the best place to get in on that market is down here near the support level. If it's gone right up here, it's going to hit the ceiling and come back down and you're going to be in a loss. If you were short in the markets, you know, the best place to get in would be here. And some people, there are lots of different ways of trading, and people have different strategies and they apply those strategies and they make money. So there are some traders that trade markets where they're going sideways. They look for this sort of scenario, and they're good at trading these scenarios. So you know, you could do a short position here. If you were one of those traders, you could short the market here, or even if it's not, if there's a strong resistance on any chart, even if it's not necessarily going between two channels, it might just be that it keeps bumping on this level up here and then it goes right down. You could short the market on this side of the line. So the point of this is that you want to get in to your trade on the right side of these support and resistance lines, and you don't want to bump into them. So another tip for you is, if you're going to be successful in your trading, you need to start applying multiple time frame analysis, and I'll do a separate video on that, but you can see what I'm talking about in my trade setups video. There's a video which I've shared on my channel to explain the typical setup that I get into. So on that video, I show how I use multiple time frame analysis to find a good setup to get a sort of 60% win rate. So when you're drawing your support and resistance lines, you know, a tip for you is, what I tend to do is I draw, say, one colour on the daily time frame, and then if I go to a smaller time frame, let's say I'm going to the 30-minute time frame and I'm trying to find an entry, there might be smaller support and resistance levels in here somewhere. So you can see, if I zoom out, there's one here roughly, you can see here. So what I would do in this time frame, so that I can see that it's from the lower time frame support or resistance area, I would draw it in a different colour, and then you can see the price keeps hitting this level and going up, or hitting this level and coming down. The support and resistance areas, it's another thing that I want to say. So these areas, they can turn from one to the other. So when a price hits one of those areas and it busts through, that area then tends to become a support. So let's say, I'm trying to find an example. Here's one. So up to here, the price was observing this support area. It was bouncing here, kept hitting this level and going back up. So a final time it hit this, it didn't actually hit the level, it sailed straight through it, and it broke the support level. And then what happened afterwards, you can see the price started treating this level as a resistance area. So every time it hits this level, it's going to come down now. It's hit it and come down, hit it and come down. So once it busts through one of those levels, it becomes the opposite. It has the opposite effect on the market. And there are traders who trade breakouts. So the way they'd find these support and resistance areas, and you know, that would be a perfect setup for a breakout trader, because he or she can see this strong level of support here, and then he'd be watching carefully to see whether it's going to bust through this area. And then this is generally, you know, if it breaks through a really strong pattern like this and comes down like this, it can be an indication that the price is just going to keep going down. And you know, these traders can make quite high reward to risk ratios on their trades. They might get like 4 to 1, because they're in that scenario, you know, the trader might put his stop here, and then he's got a lot of, you know, if you just look at the size of that, he's got a lot of room to make profit. The stop would be there on the other side of the line that it broke through. So you put your stop there, and then, you know, the price came all the way down here. I mean, it's 6.34 risk to reward ratio. So you can, I'm not really a breakout trader, but I know that there are traders that do this, and they're quite good at it. So what else do I want to tell you? So basically, if you want to get a good win rate in your trading, it's crazy to ignore these levels, and you want to start with a higher time frame my advice is to use the daily time frame as your Bible time frame to draw these sorts of levels at a high level, and then look for a smaller time frame setup to get into. Why am I saying that? The reason for that is because it's like the daily time frame can override anything below it. So let's say, you know, if you've got a daily time frame line here, and then you go to the 15-minute time frame, the 15-minute time frame is not going to be able to bust through that level. You can see here, actually, it's perfect scenario, an example. It's hitting it and it's struggling to get through. It's hit it a few times and it's struggling. The reason it's struggling is because on the daily time frame it's got resistance at that level. That's been going back for donkey's years. So it's critical if you're trading a lower time frame to know where these levels are on the higher time frames. But it's not the same is not true the other way around. So the daily time frame doesn't really care so much where the support and resistance is on the 15-minute time frame. You can't really see it. It's just, it doesn't work that way around. So, you know, the higher support and resistance areas are overriding the smaller ones to an extent. So it's best to start high and then find your trade in a lower one. Another tip is that if you find a support or resistance area on the higher time frame, and then you can find an entry point at that level on the lower time frame, this can be a really good opportunity for you. So I'm just gonna see if I can demonstrate this. So let's say I just put a cross there. So if we go to the 30-minute time frame, where was that now? Here we are. There's my cross that I drew on the daily time frame. So let me see. Just going to go back up and have a look. Let me see. Actually started confusing myself because I've got the orange ones on there as well. So right now on the daily time frame I'm interested in the red support or resistance areas. So, you know, when the price comes here, it's just come down to the higher time frame support area. So then if we go to the 15-minute time frame or the 30-minute, might be easier to look at. Where is my cross? Here it is. Right. So you can see on the 30-minute time frame, this would be a really good area to get into because you know that it's also at a support area on the daily time frame. And these trades where you get in on at a support level that you can see through multiple levels, they tend to have a better win rate. You can see that you can see that level here on the 30-minute time frame as well. Let me just on the 30-minute time frame, it looks like it's more like here, which is where I drew my cross. But you can see it there as well. There's a support level there as well. So the point is, you're coordinating getting in at a support level on both the daily time frame and the 30-minute time frame. And there are lots of traders that can see, you know, that's a good entry point. And this is where it came up, I think, on the daily time frame. This whole scoop up is the daily time frame push up. So let's have a look at 1 hour time frame. Same thing with the 1 hour time frame. You can see the support level on here as well. I think that's all I've got to say on support and resistance levels. They're really important in your trading, and so they're essential to get a good win rate. So you can't really ignore them if you want to be successful. If you've got any comments or you want to share, your experience of using these levels, then leave a comment in the comment section. Right, I hope you found this helpful, and yeah, take care. Bye.